Welcome to Subramani. I've been going to talk to you about multi-asset funds. I've been saying that multi-asset funds could be the core of your portfolio. So somebody asked me which multi-asset fund. I don't know. Top of mind recall for me has been ICICI Prudential and DSP. Those are the places where I have put my money. That's what I can tell you. Though I don't like to say that these are perhaps not the best. I have put money in both these funds long back. I've been getting decent returns, but I have not compared and said, oh, that ABC mutual funds MAF or multi-asset fund is doing better than this. I really wouldn't know. I haven't done much of a comparative study for my own investments, right? So I like some of these funds, so I have put money there. So what is MAAF, right? So what is a MAF? MAF is why should it be a part of a serious investor's core portfolio? In India, multi-asset funds are once mandated by SEBI to put at least 10% in each of the investment categories. So I could create a MAF with equity, debt, gold, oil, and maybe anything, tungsten, right, metals. So metals and oil. So I could say I will put 10% in metals, 10% in oils, and in oil, and 35% in debt and 35% in equity, and balance I would have options or I would have cash. Any of these things is possible. It just as minimum should be 10%. So gold, commodities, anything, either by way of hedging or by way of diversification, right? So when one is not doing well, maybe the other thing will do well. These funds could ideally be at the core of your portfolio, which means 50-60% of your portfolio could be this, and then balance you could use for, say, a large cap fund or a mid cap fund or whatever, depending on the portfolio in your multi-asset fund. They are likely to achieve good professional results, because the professional is going to decide how much to be in equity, when to sell gold, when to buy silver, right? These are questions which you don't have to answer, and there is enough evidence saying that the lesser number of questions that you have to answer and lesser number of actions that you have to take, your portfolio will do better. So that is the reason why being in the in a dynamic asset allocation situation in one simple vehicle makes sense, because very likely that adjusted for returns and adjusted for taxation, you might get a better return in this than putting some money in equity fund and paying 12.5% tax, and putting some money in debt fund and paying 30% tax, assuming you're in the 30% slab. Now there is another problem, that today very likely that you're saying, oh, gold has fallen 8%, gold has fallen 9%, should I buy more gold? Should you buy more gold? Should you buy gold miners? Should you be short gold miners? I am not answering any of those questions. I have no clue. But instead of putting money in a gold fund and then wondering when to sell and when to buy, a multi-asset fund makes more sense, because here everything will get taxed at 12.5%. Even your debt will get taxed at 12.5%. So you're much better off in the multi-asset fund or a balance advantage fund vis-a-vis putting some money in equity and some money in debt. It is amazing how many YouTubers and television presenters come and say you should put some money in equity and some money in debt. Put the equity money in a debt fund, in an index fund, put the debt in a gilt fund, right? It's ridiculously wrong advice from a taxation point of view. So multi-asset fund makes more sense. It helps you in diversification, because automatically across unrelated assets you have invested, and you may not have the skill to look at a good debt fund and an equity fund and timing in gold. So you're leaving all this to the fund manager, which means he's not going to give you great returns. In fact, this fund is going to look bad in the bull market, but in a market which is going sideways, market which keeps going up and down, right, with high volatility, you might get better returns with lesser volatility. right? Manually, if you tried doing this, you will it is too painful. Secondly, you will incur transaction costs, and very importantly, you will pay tax at a much higher rate if you try to do it across funds, right? You sold equity after 9 months and you put it into debt, you're going to have a problem, because you're going to have an exit load and you're going to have a 20% tax, right? You don't want to do all that. Instead, doing an SIP in a multi-asset fund makes more sense. So rebalancing is something which the fund manager does. When the fund manager does, again, you will not, your timing could be wrong, and you're going to incur taxation and transaction expenses. So rebalancing when done by the fund is much better than rebalancing done by you. You are definitely going to get a reasonably good return. If let's say the CAGR on equity returns is something like 18-19%, here you're going to get 12-13% with less headache, and there would be times when you would be very happy that you put money into this fund rather than putting money into equity. Especially when equity markets go up, this fund will look bad, but when it comes down, this fund will look like a genius, right? So drawdown from equity may not happen, right? So nobody is going to come and withdraw money from a multi-asset fund when they need money. More likely that if the equity markets are likely to go down, they'll withdraw from equity. So drawdowns may not happen much in this fund, so which is better for you. So better risk-adjusted return, simplicity, right? So if you tell me that you have a 23-year-old daughter, 24-year-old daughter who needs to invest for the next 50-60 years, some money is in equity and some money has to be in some debt. This might be a very good asset for a 30-40 year kind of time frame. It's not too difficult to manage, and many fund houses would give you 2-3 managers, one to manage equity, one to manage debt, one to manage commodity, and one to manage the ratio between that. So 3-4 heads are managing these multi-asset fund, which itself is good. So it is definitely tax efficient also, and all weather you can invest. So SIP over long period of time will also work. So these are the reasons which I think for a serious investor, putting money in MAF, which is the multi-asset allocation fund, makes a lot of sense. Thank you.